Hello and welcome. You're watching Your Trades on 80 now with me, Snehisha, and with me as always is Priyanka Uppal. And rather range-bound trading session, if we can say so, for today's trade, especially on the Nifty front, Priyanka, because at one point we were lower by almost 0.5% on the Nifty, and then look at that stellar recovery that Nifty has seen today, closing the day with very nominal gains, almost flat, just an 8-point cut coming in on that index, and Sensex also closing with the exact same amount of percentage drop coming in. 27 points lower is where that where the Sensex has also ended. India VIX on the flip side 3% lower today after a continuous spree of upswings coming in on India VIX, so that's positive. On the flip side, you have Nifty Bank that has beaten the other benchmark indices and is up almost more than 0.1%. So Nifty Bank has ended the day with the green. If you take a look at the broader markets, you have broader markets that were bucking the entire trend. Nifty Mid Cap has ended the day with a gain of 0.4%. There you have it. Nifty Small Cap also 0.7%. The biggest gainer compared to its other peers was Nifty Small Cap. Now let's take a look at sectorally what has happened today. You have media that has outperformed the entire street. Very good moves coming over there as well. FMCG once again making an entry into the positives. 0.3% high is where that index closed. Balrampur Chini, ITC did pretty well for FMCG today. Energy stocks also doing pretty well today. ONGC, BPCL, Coal India, all of them did well. And Nifty PSU banks, Nifty Bank and Nifty IT, all of them holding into the green. On the flip side, Realty was your biggest loser today. 1.5% lower, dragged by Brigade, Lodha, Phoenix as well as Prestige. Nifty Pharma and Auto 2 ending the day with cuts in the red. And another big news to watch out for today was Raymond. That was a stock to watch out for because it started trading ex a demerger today. Remember, it's a demerging its lifestyle business, its real estate arm as well, and as well as the engineering and the defense business as well. So all of those companies are expected to list on the street by September. But well, yes, Raymond has started trading its lifestyle business today. That stock was up almost 4 or 5% in today's trade as well. But Priyanka, what else were you spotting today?
2-3 sectors, like you briefly spotted, Snehi, oil and gas space. There were the actually main current which was flowing, main energy which we could see was oil and gas space. Post Hardeep Singh Puri made comments on India's oil and gas exploration, which offers $100 billion opportunity. We saw stocks like ONGC, Coal India, OMCs all soaring high in the trade today. Then another set of stocks which were shipping stocks. You look at SCI, Shipping Corporation, that was logged in 20% upper circuit. CMAC, GE Shipping, they were all 7 to 8% up today. And there are a lot of announcement, which is of course the budget specific sectors which are running high. This space is also expecting some kind of announcement. In fact, we have an exclusive lined up in the show further. Prakash has gathered some details that maybe shipping sector, the ministry has already submitted a proposal to the finance ministry, and there could be a special fund which could be coming in. That's how this entire space also saw stocks high in the trade today. TCS, all eyes on the results now, which will be kick-started with IT pack from TCS, and entire IT pack is strong ahead of the numbers. So all eyes on TCS results, but yes, alongside a lot of Q1 updates where we saw the stocks reacting like Sulaminiad. We saw a good set of numbers there, but then there were IBR Infra which posted its store revenue. So there were some different stocks which were reacting on the news and the Q1 updates also. So these were the couple of stocks and the sectors which were up in trade today. More or less, it was more on a consolidation trade. In fact, very narrow range which we saw on Bank Nifty. Nifty did saw at least 200 points of range, but Bank Nifty had a very narrow range today. Now let's understand what is Kunal gathering from the index, and also at the same time what is his recommendations. Kunal, more or less it was a kind of a day wherein maybe the street is also in an anticipation or maybe in a wait and watch mode ahead of the IT numbers. We saw index clearly consolidating. Dips were there, but dips were bought also. Many sectors which in fact retreated from the lower levels. What do you have to say about the index at this point in time? Are we going to spend some more time, or do you see some positive signals?
Good afternoon. So, my belief is that the index is just consolidating into a range. The range could probably get a bit more widened this time around, because if the India VIX starts to, increase, so we are almost at 14 on the India VIX. If we say jump to 16 levels or 18 levels on the India VIX, assumingly pre the budget, then the volatility could probably expand and that could lead to an expansion of the trading range for the indices. Today, however, was a day where we saw the action more specific towards the broader market, because you see the mid caps and small caps and the kind of stocks which were making fresh swing highs, lifetime highs, 52-week highs for themselves. I think indicated that the action was more broad based. You didn't have too many large cap stocks which were showing very strong price momentum, gusto. So I think in that aspect, I would probably believe that the signals over the last couple of days indicate that the index is getting into a range and the action could be more stock specific, especially towards the broader market as such.
Okay, quickly, Kunal, just we'll come back to you. In fact, TCS results are out. What we can see is that PAT is at 12,000 crore. That's the figure coming in from the agencies. We had a poll of PAT coming in at 11,900 crores. So Anisha will actually gather us more details on that. What was expected was that CC revenue growth, which could be seen at 1.4%, $1.4. But then let's see, as in when we get more details on it. But then entire IT pack was strong ahead of the numbers. Anisha is here with us in the studio. Anisha, first cut.
Yeah, we have just the PAT number right now, and it's broadly in line to slightly better than expectation at 12,000 odd crores. The expectations weren't much to go by, to be honest. We were expecting just a 1.4% growth on the top line. The profitability, that is why, was fairly limited with respect to the expectations. So we have got the number of 12,040. That's as far as the profitability is concerned. I'll just try and kind of glean in insight into further numbers if we can get that, because I think constant currency will be important to get. Okay. And the fact whether BFSI has managed to recover or not, because BFSI has been a problem area for the company. Europe is something that has done very well for them. So that's not really a worrying factor. It's BFSI as well as North America. If it's managed to show some sort of recovery, that will be taken well by the street. And whether there is a headcount update or not on the positive side, because last 3 quarters, they have been reporting a negative number when it comes to the headcount. So that's something we are watching out for. I do not have any other numbers at this point of time. Yeah, dividend they have approved, which is fine. That's par for the course. I think the more important number is constant currency and the margin profile. Margin was expected to dip down on account of the wage hike impact that comes in. And I'm looking at the top line number, it's 62,613 in terms of the rupee revenue. So that's also better than expectation that has come in. But I think we'll have to wait by for the constant currency number that the company gives out and then look at what the other internals are, because these are only the 2 numbers that we have at the moment. That's the top line as well as the profit figure that has come in. Let's wait by to get more details. Maybe we can get the analyst to join us to talk to us more about what this earnings season can actually mean for the IT sector. Mantesh is with us right now. Mantesh, thanks so much for making time and speaking with us today. Overall, the profitability has come in better than expectation at 62,000 odd crores, and even in terms of revenue, there is a smidge of a better number coming in versus expectation at close to 62,000 crores. Any first takes on the number?
So the first take that I can see is probably the margin seems to have decreased. I'll have to recompute it, because the top line number, like you said, has come in better than expected. But on the bottom line side, the profit is actually declined for sequentially. Now there seems to be a margin compression that's apparent in the results so far. So, and we need to await the company's data in terms of the metrics as well.
That's a take coming in as far as the first numbers that we have. But overall, what's the view on the IT sector? I mean, is there any hopes that we should pin with respect to, recovery maybe at the second half of the year, or the fact that FY26 can at least be a double-digit growth number? Is that an expectation we should start pinning, or it's too early to call out that?
It seems to be a little too early to call on that. What needs to be watched is how is the deal flow that is happening for these companies. We had seen Accenture some time back actually, reducing their guidance ahead, but the deal flow was fantastically very high, which means that while the companies are able to get outsourcing deals, the way they are getting implemented is getting delayed. So there seems to be a delay in terms of the overall deal pipeline being executed. So execution is the problem. So that could tell me that we should expect better, revenues and better profitability later down the year, and it's too early to call anything right now.
Okay, I think I have the margin figure as well that my team has helpfully calculated, and it's come in at 24.6%. It's a little lower versus the street expectation, I would believe. It's not 24.7 is what we had penciled, so it's not a huge miss. In my judgment, Mahantesh, it should go down okay with the street, right? It isn't a bad number on the top line. The revenue is also quite decent in terms of at least the first numbers that we have. And now even on the margin front, it's not a big beat, but at least it's not a howler or a big miss coming in from the company. Fairly in line, one would have to say.
So the margin, when we do the analysis and look at the breakup thereof, the efficiency, that is utilization, is what matters most. If the utilization comes in better and despite that the margin is a slight miss, then we would be a little worried. But if it is the margin improvement or the slight fall that you're talking about has come through COGS, which is essentially SGA, which is essentially on the selling side, then probably it could be useful to understand what's the way ahead. So between the utilization rate and the selling expenses that they incur, what is more important is that the utilization rates shouldn't necessarily fall. So they're showing that the company is doing better on the execution side. If the margin improvement or the small fall in the margin is due to SG&A expenses being controlled, then obviously these expenses will recur once again later down the line.
So that's the take coming in as far as the first set of numbers is concerned from Mahantesh at this point of time. We're getting incremental details and the commentary coming in. The attrition rate has come off and that was expected 12.1%. But K. Krithivasan is saying that they're pleased to report a strong start to the new fiscal year. They're seeing expansion when it comes to certain geographies as well as client relationships. And they're also talking about how the new delivery centers in America, Canada and Europe is expected to play quite well for them going forward. Samir Siksaria is also talking about the fact that despite the wage hike, which is of course going to play a part in Q1 earnings, they have delivered strong margin performance. Operating excellence is something that they have been talking about and they've delivered on that as well. In fact, on the margin front, it has been nothing short of impressive for TCS of late. Milind also talks about how the increment process has gone in pretty much the fashion that they were expecting. The employee engagement is something that they're working on. And of course, employee retention is something that they've managed to do well. And that's quite visible with the kind of attrition number that we have seen coming in for the company, which is lower to the levels of around 12.1% thereabouts for the company. But Mahantesh, if I had to ask you the top picks within the sector and differentiate it, let's say within a large cap IT and a small cap IT, tell me which are the names that come to mind from the large cap names and then the mid caps.
So from the large cap, it is obviously better to go and stay with the larger peers, the top four. So TCS being one of the larger ones seems to be the one to really go for. But when it comes to mid caps, you have to search out those which are in the engineering services space. It could be such companies as a Tata Tech to a Tata Elxsi to even a KPIT. So some of these companies can deliver better growth ahead because engineering services is generally seeing a revival, particularly driven by the driving side technologies that are getting developed. So we should be looking at these companies. But TCS is the largest company among the IT players and the safest, I would consider, for any portfolio. It's like something that everybody would have in their portfolio.
Taken. We are watching out for all of that. Omkar Tanskali also joins us on the show. But before that, just wanted to fill you in with some other details that we've got as well. It's a 4.4% constant currency number coming in. But do remember, this is YOY, not quarter on quarter. Usually, we look at quarter on quarter and there the expectation was 1.4. There's a net headcount addition that has also happened. So 3 quarters on a row, we had seen that the headcount had declined for the company. This first green shoot emerging now that the headcount has actually improved, telling you perhaps that the company is getting a bit more confident. And it's a not a small headcount addition. It's a headcount addition of 5,452 coming in. So that's quite positive as far as headcount is concerned. And even if you look at the other verticals, BFSI continues to be a pressure point because in terms of the composition, BFSI continues to, provide lesser contribution overall to the business, and North America too has managed to kind of drop a bit with respect to the contribution that it does to the overall business. This time around the company has not actually given out the dollar revenue number, at least I'm not able to find that as quickly as usually we are able to, because it's the first number that they usually give. We'll have to look for that further. But Omkar, we have a constant currency number on a year-on-year basis which is 4.4%. Profit figure of 12,100 crore thereabouts, and then margin figure coming in at 24.6% with a net headcount addition of 5,400 and attrition of 12.1%. First thoughts on the number?
Yes, definitely. I mean, TCS has been demonstrate better execution capabilities, as compared to the large cap peers, and we believe that in this quarter also they have demonstrated better execution. The numbers are largely in line with our expectations. We were expecting some dip in the margins because of the salary hikes, and the management has also highlighted there is to be a bottomed out of subcon cost, though. So we were expecting subcon cost to be going up. I mean, it's been expensive as compared to the previous quarters during this quarter, so largely impacting the operating margin on the negative side. But yes, definitely. I mean, the worst is over now. I mean, slowly, there are some green shoots in terms of demand, and they have started, executing well. There's definitely BFSI and North American side is still under stress, but we will likely, the TCS will, the demand side will likely to continue or improve going ahead.
What kind of deal win number have you penciled in, Omkar? What would probably give you that confidence that the company is on the right path? Because we look at two growth metrics usually, that's the deal win and the headcount. We do have the headcount addition number at 5,500 thereabouts. What kind of deal win number and what quality of deal wins will make you confident about the company's growth prospect from here on?
We were expecting around $8 to $10 billion of deal wins during the quarter. As you know, the Accenture have also reported a robust set of deal wins. But I believe rather than it's more of, the headcount growth in the headcount of addition of 5,400 odd numbers is demonstrating well. I mean, it's a better indicator as compared to the deal wins, because in the previous quarter, the deal wins remained resilient, but the execution was delayed and the decision making also delayed. Due to that, the IT sector has overall showed the laggard growth or the tepid growth in the previous quarters as well. But I believe, yes, definitely the headcount addition is definitely a green shoot, and we are likely to be demonstrating a further ramp up of the deals that they have won in the previous quarters as well.
Interesting. So that's the take coming in as far as deal wins are concerned as well. But how much credence, Omkar, would you give to the BFSI vertical and overall US? Because Europe as a territory was doing well for them. BFSI was weak. It is perhaps going to be in red again because the company is saying almost all segments have reported a sequential growth. So we don't know the breakup yet, whether BFSI has reported a growth or not. And then America, which has been not as great a geography for them as has been UK and Europe.
Yes, definitely. I mean, the BFSI is the largest contributor to the revenue, and the dependency is quite high as compared to, the other verticals. But the three sectors have been, or the three verticals has been majorly tempered up, which is BFSI, telecom, and the high tech, showing the delay in the decision makings and the tepid growth. But I believe definitely, BFSI is a key indicator to watch for. And if there is any stagnancy for this quarter, and if we have to see what the management says in the near term ramp up on the deals of the BFSI and any discretionary spend coming in for the IT expenditure. So that is the thing that one should be looking for.
Mahantesh, a quick question to you with respect to AI. And we do have actually the US dollar revenue number now. It's coming closer to that 7.5 billion mark, which was expected. We were working with a number of 7,550 thereabouts. That's what the number has come in closer to as well. So $7.51 billion what they have said. And again, in constant currency, it's 4.4% in terms of the growth. So revenues is not a problem. Even margins are pretty much in line. Profitability is a beat as well. But my question to you was that with respect to the disruption that we have seen in AI, how much do you think the Indian IT companies have the right to win? Would it be an opportunity? Would it be a threat? How are you looking at the IT sector in context of this AI wave that we are seeing?
So AI will be a complementary kind of trend for most of the Indian IT companies, because you have one from the AI perspective, one front end, and one you will have a lot of back end that needs to be set up for AI to be effective in any organization, and that's where the back end is where Indian IT companies will excel very likely, and therefore from a transformation perspective, whichever organizations are heralding AI will look at a lot of back-end support that will come from Indian IT companies. I think AI will therefore be complementary, like I said, from Indian IT company in terms of complementary services. Along with AI, you will also have related services that will spur further demand. It could be related to cyber security itself, because AI is quite intrusive. You need to have many security layers for it to be effective. And therefore, many of these Indian IT companies can potentially grab a pie or a business share out of those upcoming businesses. But from a purely enterprise perspective, enterprise solutions perspective, that's something which will start probably dipping as we go ahead. But back-end services related to AI and cybersecurity should start growing for them.
Taken. Omkar, since we have you with us, also talk to us about HCL Tech expectations. It's expected to come out tomorrow. Any read-through that you would want to carry from TCS to HCL Tech? Very different businesses, I understand, with the platforms and products business, etc. But anything as a read-through that you would carry forward for the sector indeed?
I mean, not as a sector, definitely. I mean, the Motu business and the ER&D will likely to, demonstrate better. But the one thing that they have already said on the previous con call, that they are going to ramp down some large client account, and that may create an impact on Q-on-Q growth. So we are expecting around 2% of Q-on-Q growth for this quarter as well. But I mean, for this quarter, but definitely, I mean, we are expecting HCL Tech to retain their guidance of 3 to 5%, which is again a strong growth as compared to the Infi part, and the better metrics is likely to continue. However, deal wins we are expecting around $2 to $3 billion, a mix of product and platform and the IT services deals. And we are expecting going ahead to be continue to be the revenue guidance. Yes.
All right, on that note, we'll wrap it up on TCS's Q1 numbers. Mahantesh, Omkar, thank you so much for joining us and taking the time out and explaining what these numbers look like and giving your first take right off the bat. Margins in line, PAT beat coming in for TCS. So overall, looking like a decent set of numbers coming in. But on that note, we'll wrap it up on this edition of Your Trades. Thanks so much for watching.